Hey there traders, thanks for joining me for this video. This is Jeff from thestockbandit.com, and it's that time once again to take a look at the major indices as we head into a brand new week of trading. This is what's going to influence how individual stocks move, so we can't just diminish the importance of the correlation that's out there these days. So we got to take a look at how the market's been acting, where are the key levels that we need to pay attention to so that we can keep them on our radar in this holiday shortened week. So the market's going to be closed on Monday in observance of President's Day, and so we've got 4 sessions to make it count. Now the last time that took place, which was in kind of the late part of January, the week of MLK Day, we did see quite a bit of market movement that week. We saw the Dow rally about 250 points. So it's certainly possible to make good sized moves even though we get these holiday shortened weeks. So last week, you'll recall we were coming in for the NASDAQ into this 3196 area. That was the 52-week high from right back here in September. Now we had rallied right up to it, and this index was really the stubborn one. It had been the last index among the big ones to break through and make a new 52-week high on this rally since this November V bottom. So last week we danced all around this 3196 area. We got a close at 3198 on Thursday, and we had an intraday high on Friday at 3206. So we got barely through that area for a couple different occasions last week, only to finish at 3192. So again, we're still dealing with this 3196 area. Should we happen to see a little bit of weakness in the days ahead, I'm first and foremost going to take a look at this little gap that remains unfilled, and that's down to the 3165 level. So keep that level on your radar. If we do happen to rally and get through this 3206, then the bulls certainly have an opportunity to start to produce a little bit better momentum because they've really been in this kind of slow grind, gradual lift, and the NASDAQ certainly has not played catch up to the other indices, but it remains in pretty good technical shape, still dealing with this 3196 area though. For the S&P 500, this index just continues to kind of stair step higher. This move right here was the New Year's Eve and then January 2nd move. Then we moved sideways and we kind of grinded higher here, and then we've moved laterally here. Now we've busted through this little area, which was 1515. That was the area that we were dealing with really for the very beginning of February for several sessions, and we finally got through there. And since then, that level's been serving as some short-term support, but we're certainly not far above it. We closed at 1519 last week. S&P, I believe, added 2 points on the week, so it certainly was not up much. NASDAQ gave up 1, so pretty quiet overall price action. We'll just continue to keep an eye on these short-term levels. Last week's high was 1524, and then of course beyond that, you have to zoom way out to something like the weekly chart here, and then you'll see this all-time high of 1576. And that was from October of 2007. So that's really the next big level for the S&P to deal with, 1576. But for now, we are still dealing with these short-term levels and kind of waiting to see if we're going to get a pullback or if these little lateral bases and little minor rest phases are all we're going to get. Again, when you get this kind of 45-degree type of move and you're lifting quietly and then moving laterally, it certainly can allow a trend like this to persist for quite some time, but we'll just kind of continue to take it one day at a time, continue to evaluate the price action, and stay objective out there. For the Russell 2000, this is the small cap index. From this November low, this index is now up basically 21%. So that's a huge lift, and it represents a major move higher here for this index, and yet it still is not really showing any signs of slowing down. We've seen some little hiccup pullback days, and which were 1% declines, and yet each of them were immediately followed by some strength. We were able last week to push through this area, which was this 912 area, and we were able to push through that 912 13 area, and then continue a little bit higher. So we added about another 10 points last week, and so this index remains pretty pretty solid. It's hard to argue with the trend like this. We did see kind of a weak finish on Friday, but volume data is not recorded for this index. There's nothing down here in the lower pane, so there's really not much to really hang our hat on in terms of another thing to base our decisions on, or beyond this uptrend that's still very much intact for the Russell. So the pace certainly has slowed a little bit, but there's really nothing as of yet to indicate that it's about to end. So I continue to just stay mindful of that fact and understand that these small caps are really the more speculative names. So there's clearly still an appetite for some risk out there. And then you've got the Dow, which is really kind of in a high channel pattern. We've been dealing with this 13,860 area. That's been near-term support over the last few weeks. And then we've been dealing with this 14,020 area. We got slightly through there last week. We got to 14,038. But again, we've closed back inside the range. So this is the big range to be watching. If we get out of this range, then the next stop is going to be that all-time high at 14,198. So stay on your toes out there. Even though it's a shortened week, don't let down your guard. Keep your standards high for new plays. And again, if you're looking for some trade ideas to add to your own, we've got them every night. We send them right to your email inbox, and we'd love to have an opportunity to work with you here at thestockbandit.com. Thanks again for joining me for this video. I will have more for you soon, but until then, trade like a bandit.